Welcome to Bears in Exile. Today is Tuesday, December 13th, and this is the market overview looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. Pretty cool today. The market was all over the place, ending with a inverse hammer on the Dow, closing below the major price consensus level, closing above the 200-day moving average. We still have the middle Bollinger Band below the short-term moving averages. The bulls are not finished yet. It certainly doesn't look good at this second, but still, we have some very interesting things to look at today. Still ticking up slowly on the 14-day RSI moving average. Notice the fast stochastic leveling out. Slow stochastic still pointing down along with the CCI, side tick on the RSI, down tick on the MACD, and the MACD histogram. Intraday does not look too happy at the moment. Down on the CCI, 14-day RSI moving average, stochastics, almost on the RSI, the histogram, and the MACD. So certainly, this may not be over with the down move today, but it's not going to be too long before all of these hit oversold, and it'll be time to bounce. You can see that given the distance between on the indicators from where they are and where they would be oversold, can we really expect it to go all the way down here and make a new low? That's a pretty tall order in my opinion, but we shall see. We'll see if that 200-day holds. If it does, great, and if not, oof, yeah, there may be some Christmas selling about to happen, but yeah, we'll see. SPX more the same, a little fatter body on the inverse hammer, and everything else is essentially the same. The only exception being the 200-day moving average. We have not even attempted in the last couple of days to hit it. So yes, this does look like high, lower high, lower high, and lower high, but we will see. The VIX. Now this is interesting. This does give an argument to the bearish case, I believe, more than the bullish case. It did get below the 200-day moving average. We were going to be really worried if it broke it, and it certainly did. Closed below it, ended with a hammer that is bullish, with the exception of being below the 200-day moving average. But we still have the 14-day RSI pointing down. We've been talking about that forever and ever and ever, but we are getting close to being really oversold here in short order. So there should be a bounce in the VIX very soon. With the down move today, it really should not have been looking the way that it is, but that's fine. That's totally fine. And of course, a bounce up in the VIX is bad for the market. So the question is, does it get above the 200-day moving average? You know, it should, but we're going to see. TNA, ugly. Woo! Down it went. It was hit a really big range today, closing down 6 1/3% for the day. It looks like we're going to get the cross of the middle Bollinger Band. We almost shorted this today. We did exit the long that we had. Thank God that we did when we did. But anyways, the morning started off really positive, and all of that just evaporated. Very similar to the down the SPX, 14-day RSI moving average still pointing up. Everything else rolling over. UUP. Now here's the reason why I don't count out the bulls yet. Closed way outside the upper Bollinger Band today. There should be a snapback, either a move down or a move to the side. But regardless, this is just a huge move and could very easily be overdone. Now, that's not to discount the fact that we did close above the real body from way back here. You know, the euro got down to 1.30 and then, you know, X today. So that was absolutely extreme. I think that it was overdone, but we're going to see. We still have the 14-day RSI pointing up. We still have everything else pointing up. Maybe it can push back the upper Bollinger Band for another day or two, but regardless, it is not healthy and it isn't sustainable to be outside the Bollinger Band like that. So move down, move to the side would be good for the bulls. Could happen tomorrow. FXE, yep. See that massive down move just totally destroying the previous low, just ripping it to pieces. We should have a snapback inside of the Bollinger Band very shortly, whether that's tomorrow, whether it's able to push it another day to the downside. If it does it like it did today, wow, we're going to be out of the 1.3s for the euro. And that is, I would imagine that would be panic selling time. Yep, I do. 14-day RSI moving average still pointing down. Stochastic still pointing down. Down on the CCI, down on the RSI, down on the MACD and the histogram. GLD, not surprisingly, strong dollar and some panic needing to liquidate way outside the lower Bollinger Band, actually almost getting close to the 200-day moving average. Everything pointing down. Yeah, we're going to have some extreme separation, just like we will with UUP and FXE. But, wow, almost getting to the lower price consensus level of the previous month. And last but not least, SLV down into the sub 30 level once again. Inverse hammer. Everything pointing down with the exception of the CCI. Yep, we got a little bit of buying in there. People picking up silver cheap right at the lower Bollinger Band. And I hope it does go lower. I want some cheap silver, but I guess I shouldn't be greedy like that. But I do think that it will be an opportunity in the long haul, definitely not in the short haul. And there it is. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.